Nvidia, the darling of the tech world, has recently seen its stock price take a tumble. This decline followed President Trump's announcement of new tariffs. Investors, it seems, were spooked by the news. The tech sector as a whole experienced a dip. However, Nvidia's fall was particularly steep. From its all-time high, the stock plummeted by over 30%. This dramatic drop raises the question, are President Trump's tariffs to blame? The answer is not so straightforward. While the tariffs undoubtedly contributed to the overall market uncertainty, Nvidia's direct exposure to them is limited. The company's core product, semiconductors, are exempt from the tariffs. This exemption is crucial for Nvidia as it relies heavily on Taiwanese semiconductor manufacturing company, TSMC, for its chip production. If semiconductors were subject to tariffs, Nvidia's production costs would skyrocket. This would likely lead to lower profit margins and potentially even higher prices for consumers. Despite the exemption, the market reacted negatively. This suggests that investors are concerned about the broader implications of the tariffs. The trade war between the United States and China is causing global economic uncertainty. This uncertainty is making investors nervous, and they are selling off stocks as a result. For Nvidia, this means that even though its products are not directly affected by the tariffs, its stock price is still feeling the heat. The market's reaction highlights the interconnectedness of the global economy. It also underscores the sensitivity of investor sentiment to geopolitical events. Nvidia's stock plunge serves as a reminder that even companies seemingly immune to direct tariff impacts can get caught in the crossfire of trade tensions. The question now is whether this downturn is a temporary blip or a sign of deeper trouble ahead for Nvidia. To answer that, we need to delve deeper into the company's fundamentals and the broader market forces at play. The exemption of semiconductors from President Trump's tariffs came as a welcome relief for Nvidia. Semiconductors are the lifeblood of Nvidia's business. They form the core of its graphics processing units, or GPUs, which power everything from gaming PCs to artificial intelligence data centers. Had semiconductors been included in the tariffs, Nvidia would have faced a significant cost increase. This would have put pressure on the company's already tight margins. The exemption allows Nvidia to breathe a sigh of relief and focus on what it does best: innovating and delivering cutting-edge technology. This is particularly important in the current climate, where the demand for high-performance computing is only increasing. From gaming to AI, the applications for Nvidia's GPUs are expanding rapidly. This in turn is driving growth for the company. The exemption from tariffs ensures that Nvidia can continue to capitalize on these trends without facing unnecessary headwinds. However, the relief might be short-lived. While the current tariffs do not directly impact Nvidia, there is no guarantee that this will remain the case. The trade war between the United States and China is fluid and unpredictable. President Trump has shown a willingness to adjust his tariff strategy as he sees fit. This means that semiconductors could be brought into the tariff crosshairs in the future. Such a move would be a major blow to Nvidia and the broader tech industry. It would also likely lead to higher prices for consumers, as companies pass on the increased costs. The uncertainty surrounding the future of tariffs is casting a shadow over the entire tech sector, including Nvidia. Despite the current exemption, the threat of future tariffs remains a real concern. This uncertainty is likely to weigh on Nvidia's stock price until there is a resolution to the trade war. While Nvidia itself is somewhat shielded from the direct impact of tariffs, the same cannot be said for all of its clients. Specifically, AI hyperscalers, the tech giants that are investing heavily in AI infrastructure, could be significantly affected. These companies rely on a global supply chain for their data center components. Many of these components are subject to tariffs. This could potentially lead to higher costs for AI hyperscalers, which could, in turn, impact their spending on Nvidia's GPUs. However, it is important to note that AI hyperscalers are not standing still. They are well aware of the potential risks posed by tariffs and are taking steps to mitigate them. This includes diversifying their supply chains, negotiating better prices with suppliers, and even absorbing some of the increased costs themselves. These companies are sitting on mountains of cash and are willing to invest heavily to maintain their dominance in the rapidly growing AI market. The importance of AI to their future strategies cannot be overstated. From cloud computing to self-driving cars, AI is seen as the next frontier in technology. As such, AI hyperscalers are likely to continue investing in AI infrastructure, even in the face of rising costs. This bodes well for Nvidia, as it is the leading provider of GPUs for AI applications. As long as AI hyperscalers continue to spend, Nvidia is well positioned to benefit. However, the potential impact of tariffs on AI hyperscalers' spending remains a key risk factor for Nvidia. If tariffs were to escalate significantly, it could lead to a slowdown in AI infrastructure investment, which would negatively impact Nvidia's growth prospects. The company's fate is, to a certain extent, tied to the ability of AI hyperscalers to weather the tariff storm.